All right, everyone, welcome back to MetaVerse Update. Get ready for a rapid-fire download of the biggest stories impacting your digital future. First up, are we seeing the end of the crypto bull run? The market is showing serious signs of fatigue, with Bitcoin, Ethereum, and Solana struggling to hold key support levels. Investor enthusiasm is visibly waning, and the question on everyone's mind is this just a temporary dip, or are we heading for a major trend reversal? Then, hold on to your hats, because while the market dips, a new opportunity is booming. We're talking about dot miners, a platform that promises an astonishing $8,700 in daily passive income. With over $1.7 billion in crypto liquidations rocking the market, this innovative approach to earning could be exactly what investors are looking for to hedge against volatility. Is this the future of crypto earnings? But the story isn't just about price swings and passive income. We're diving deep into the Asia-Pacific region, which is absolutely dominating the crypto transaction scene. Reports show a massive surge in on-chain activity, making it the fastest-growing hub globally, even with complex regulatory landscapes. What's driving this boom, and what does it mean for the rest of the world? And finally, we'll break down the numbers behind Asia-Pacific's crypto explosion and explore the diverse use cases driving adoption, from remittances to gaming. It's a complex picture, but one that's reshaping the global crypto landscape. Stick with us through all the details, and make sure you're subscribed and have that notification bell on so you don't miss a single beat. Crypto's comeback crumbles. The cryptocurrency market is sending shockwaves with undeniable signs of fatigue, leaving investors questioning the future of digital assets. With Bitcoin, Ethereum, and Solana teetering on crucial support levels, the dream of a continued bull run appears to be fading fast. This isn't just a minor fluctuation. It's a significant downturn characterized by a palpable drop in buying power and enthusiasm, especially after massive liquidation events. The overall crypto market cap has dipped, and key assets like Bitcoin have fallen below critical price points, with Ethereum experiencing a sharp decline. This decline in buyer interest is creating a ripple effect, challenging the stability of major cryptocurrencies and raising concerns about a potential trend reversal. Traders and analysts, including notable voices like Ansem, are highlighting a critical shift: the exhaustion of marginal buyers. Unlike previous downturns where liquidations spurred aggressive buying, we're now seeing a vacuum, with those crucial stabilizing forces absent. This absence suggests that further price drops for Bitcoin, Ethereum, and Solana are not just possible, but probable, as the market grapples with dwindling demand and historical seasonal weaknesses, like Bitcoin's typical September struggles. The implications extend beyond individual assets. Dwindling trading volumes and a lack of fresh capital are signaling a market on the brink, questioning the sustainability of current valuations. The tightening grip of global monetary policies adds another layer of complexity, making investors hypervigilant about economic indicators and the potential spillover from traditional markets. The current environment underscores a profound unease, pushing the demand for integrated crypto-to-fiat solutions. Businesses and startups are being urged to create comprehensive frameworks that merge liquidity channels, not just for compliance, but for survival in turbulent times. This strategic adaptation is seen as vital for mitigating the impact of liquidity crises and market fatigue. Will the market find its footing, or are we heading for a prolonged crypto winter? Stay tuned as we uncover the surprising strategies investors are using to navigate this turbulent crypto landscape in our next segment. Passive income paradise amidst crypto chaos. As over $1.7 billion in cryptocurrency positions face liquidation and major assets like BTC and ETH plummet, a beacon of stable returns emerges: dot miners. This platform offers a remarkable daily income of up to $8,700, providing a stark contrast to the market's volatile downturn. In a landscape defined by increasing market uncertainty, dot miners leverages cross-chain computing power and a DeFi revenue distribution mechanism to deliver consistent passive income. This innovative approach allows investors to earn long-term returns without being directly exposed to the sharp price fluctuations that have plagued other assets. It represents a potential paradigm shift in how investors approach crypto wealth generation, focusing on stability over speculation. The platform details a clear path to earning, starting with a $15 free hash rate for new users upon registration, eliminating the need for an initial deposit. Miners presents a tiered investment structure, ranging from $100 for a 2-day period yielding $3.05 daily, to a substantial $250,000 investment over 45 days, promising a daily return of $5,300. All returns are settled daily, with principal returned upon contract expiration, and withdrawals offer flexibility. The platform emphasizes security and transparency, being UK headquartered and adhering to financial regulations, with publicly available contract information. It also boasts 100% renewable energy for its mining farms and accepts a wide range of mainstream cryptocurrencies, partnering with Bitmain for hardware and technical expertise, and employing robust security measures like Cloudflare defense and EV-SSL encryption. Analysts are pointing to platforms like Miners as a potential key trend for future crypto investments, especially for those seeking to diversify risks and mitigate the impact of volatility. The invitation program, offering a lifetime 4.5% commission bonus for referrals, further incentivizes community growth and network building, creating a digital wealth network. Could this be the answer to weathering the crypto storm? Next, we explore how the Asia-Pacific region is becoming the undisputed leader in crypto transactions, despite regulatory challenges. Asia-Pacific's crypto conquest, transactions surge amidst regulatory maze. The Asia-Pacific region is not just participating in the crypto revolution, it's leading it, with on-chain activity experiencing a phenomenal surge. This rapid growth is happening despite a patchwork of inconsistent regulations and varied adoption paths across the continent, positioning Asia-Pacific as the world's fastest-growing crypto transaction hub. This dynamic trend signifies more than just increased trading volume. It highlights a diverse array of use cases spanning remittances, savings, gaming, and speculative trading. However, the report from blockchain analytics firm Chainalysis also flags a crucial counterpoint: regulatory uncertainty. This ambiguity poses a potential threat to the long-term sustainability of the region's impressive momentum, even as adoption accelerates. Chainalysis's latest report reveals that over the 12 months ending June 2025, Asia-Pacific saw a staggering 69% year-over-year increase in the value of cryptocurrency received on-chain. The total transaction volume in the region skyrocketed from $1.4 trillion to an impressive $2.36 trillion. This surge is particularly strong in key markets like India, Vietnam, and Pakistan. The monthly on-chain value received more than tripled, climbing from approximately $81 billion in July 2022 to a peak of $244 billion in December 2024, and has remained robustly above $185 billion per month since. What's particularly noteworthy is the driving force behind this growth. Unlike North America, where institutional investment often leads the charge, Asia-Pacific's expansion is predominantly fueled by broader retail-oriented demand. Chengyi Ong, head of Asia-Pacific policy at Chainalysis, emphasizes this distinction, pointing to a more grassroots adoption pattern across the region. Is this retail-driven boom sustainable in the face of evolving regulations? We're about to dive into the specific numbers and user behaviors that are making Asia-Pacific the undisputed king of crypto transactions. Asia-Pacic's crypto dominance, a deep dive into transaction trends. The Asia-Pacific region is solidifying its position as the global epicenter for cryptocurrency transactions, showcasing the most significant growth worldwide. This surge in on-chain activity is occurring even as the region navigates a complex and often inconsistent regulatory landscape, demonstrating the powerful draw of digital assets for a diverse user base. This remarkable expansion, detailed in a recent Chainalysis report, underscores the multifaceted utility of cryptocurrencies, extending far beyond simple speculation. Use cases ranging from facilitating remittances and savings to powering in-game economies and enabling speculative trading are all contributing to the region's impressive on-chain metrics. However, the report also cautions that the evolving and often uncertain regulatory environment could pose challenges to sustaining this high level of growth over the long term. Over a 12-month period concluding in June 2025, the Asia-Pacific region experienced a remarkable 69% year-over-year increase in the value of crypto received on-chain. The total transaction volume surged from $1.4 trillion to $2.36 trillion, with significant contributions from major markets such as India, Vietnam, and Pakistan. Monthly on-chain value peaked at $244 billion in December 2024, a threefold increase from July 2022, and has maintained a strong performance, consistently exceeding $185 billion per month through mid-2025. A key differentiator for Asia-Pacific's crypto boom, as highlighted by Chainalysis's head of Asia-Pacific policy, Chengyi Ong, is its foundation in broader retail-oriented demand. This contrasts sharply with North America, where institutional investment plays a more dominant role. This widespread retail adoption suggests a deep integration of crypto into everyday financial activities and digital lifestyles across the region. Can this retail-driven momentum overcome regulatory hurdles? Join us after the break for a quick recap of all today's top stories and our final call to action. And that's a wrap on today's MetaVerse update. We saw crypto markets grappling with fatigue, miners offering a potential $8,700 daily passive income, and the Asia-Pacific region absolutely leading the charge in crypto transactions. Don't miss out on the next big wave. Make sure you're subscribed, hit that notification bell, leave a comment with your thoughts, and follow us on all our social channels for more. We'll see you next time.